Welcome to Chart of the Day. I'm Nico Isaac. China's yuan weakens despite the will of its central bank. The dismal performance of China's currency is front and center on this inverted chart of the US dollar Chinese yuan. In May 2019, the yuan suffered its biggest monthly decline against the buck since 2008 to near crisis levels. Many investors may ask, why do China's financial authorities allow the yuan to plunge to such lows? The answer? The People's Bank of China, or PBOC, does not control the yuan. Consider the yuan's 2018 decline versus the dollar. In July of that year, the PBOC attempted to limit the currency's rout by raising the daily reference rate. That attempt did not change the trend. As the yuan fell to a 5-month low against the dollar, one news source called the bank out on July 9th. Quote, yuan weakens further despite efforts by People's Bank of China to stabilize exchange rate. End quote. Later in the year, the PBOC again tried to support the yuan by freeing funds for domestic banks, and again, to no avail. Wrote one October 9th Wall Street Journal, quote, Beijing struggles to keep its currency on course. Fast forward to the yuan's miserable May 2019, and this blunt analysis of Chinese currency movers. Quote, the central bank is trying to smooth the pace of depreciation, but this is something cannot be stopped by anybody's will, end quote. So, if the government isn't controlling the yuan, who or what does? Let's go back to April 2018. At that time, the yuan stood near a 2.5-year high against the US dollar. Sentiment toward the yuan was nearly the opposite of today. Accordingly, faith was strong then that China's policymakers could keep the yuan's value high. But in contrast, our May 2018 Asian Pacific financial forecast showed subscribers a labeled version of this chart with a bearish Elliott wave pattern for the yuan-dollar rate. Specifically, this peak was already in place at 3 degrees of trend, plus a more recent break of this lower channel line. What followed from there was a massive 10% decline in value for the yuan versus the dollar, which erased its entire 2016 to 2018 rally before pausing in January of 2019. That month, our January 20th Asian short-term update warned that ongoing efforts by China's authorities to boost its currency would be futile. Quote, those easing policies should coincide with a strong advance in the dollar versus the yuan in coming months, end quote. By late April, the yuan was depreciating again and in May moved within spitting distance of the 7 level. On May 21st, EWI analyst Murray Gunn offered this summation, quote, although the Chinese authorities still try to manage the currency, the Chinese yuan has never been increasingly free traded over the past few years. Therefore, market forces play a dominant role in its path, and the clarity of its Elliott waves is a testament to that, end quote. Whether the yuan does indeed break 7 versus the dollar won't be up to policymakers, but rather the Elliott wave pattern. See below for more.